growing at 7.5%. The corporate profit to GDP was very, very strong. And that is the sort of growth we did witness between 2000 and 2008. All of us know that 2003 to 2008 was the golden period of the capital markets. The markets became, India's structural infrastructure story started unwinding. There was a lot of growth happening, consumption was increasing, infrastructure development was happening, and India started progressing rapidly. These are the numbers which probably reflect what was happening at that point in time. Let's see what happened to the markets. 2003 to 2008, the market was moving up, and then all of us know the crisis happened. 2008 to 13 was the consolidation phase of India. That was the time when many things happened. Not only crisis happened, government changes happened, the QE, all of us have forgotten about QE tapering and the QE story which started at that point in time. Liquidity was brought into the world. What happened in the last 2 years, it was happening at that point in time too. Inflation went up, interest rates went up, things started going into a spiral, and we know what happened to the capital markets. It was all flattish. Many things happened between 2008 to 13, but that was the time when India was consolidating, friends. It was not the phase where India was going through tough times, because the foundation which was built between 91 to 2008, that started, yielding results in making us become more and more resilient, becoming more and more stronger. Now let's get into the phase which is more recent, which all of us have witnessed, all of us are proud about, all of us are, probably enjoying the, fruits of the success which all of us have seen in the last, between 2013 to 2022, a 9-year phase. What happens, generally when we are trying to do our stuff, we forget that 9 years is not a very, very long phase within which what has happened in India is something which no one can believe. The outside world is appreciating that. Within India, we try to appreciate that, but we still believe that we could have done much more. But when we see the slides from here on, you will find that in that 9 years period between 2013 to 22, so many structural things have happened in India, and that is why we are all here today. And what other speakers have spoken about, foreign flows coming in, Indian mutual fund investors supporting it, etc., etc. But it has happened because of some of the structural reforms which have happened. Let's talk about it. These are certain things which we should not forget, because this will keep aiding our journey in the years to come. Right from Aadhaar to the banking reforms to Jan Dhan Yojana, the DBT, ease of doing business, housing, road, power, the list goes on. But it's only a 9-year period within which this has happened, within which 2 years of COVID was also there. So please note, 9 minus 2, 7 years of effective working. All these changes, all these structural changes have happened, and the fruits are getting, we are seeing the fruits of the success now, and maybe in the 10, 20 years of follow-up from here on. Three things. Formalization, unorganized to organized. This is a big change which has happened. The MSME, SME, and the mid-corporate and the small corporate sectors have now started, emerging in the last 5 to 7 years because of this structural change which has happened, where from unorganized sector to organized sector shift which has happened. Financialization of savings. We have all heard about that, how mutual funds have been the recipient of that. There are other categories like capital markets, the broking business, the insurance business, the other allied businesses where investors have gone and participated in the growth of those industries. One cannot forget that, and that is the big shift which has happened, which is called financialization of savings, and this is going to happen much more as we go ahead. Transparency and the ease of doing business. Please note, friends, all of us are witnessing it on a day-to-day basis. I'll give one example, small example, how I believe, and I've experienced that in the last 10 days. I was buying some stuff from an e-com company about a month and a half back. That product turned out to be defective. It came to my house and I wanted to return it. There was some issue. Those guys were not able to cooperate with me. I put a complaint to consumer forum. I just did an online complaint to consumer forum. Within 5 days, that problem was resolved. I did not have to go to that office, apply for some physical application. It all happened digitally without any human intervention, and I got the result of what I wanted from that e-com company. So that is the way the transparency in India has happened, and in the past, probably this would have been a nightmare for me personally. So this is the way things are happening. It is becoming convenient for all of us, but today it's a way of life. That's why we all want to see much more better things happening. But this is what has happened, and what we are today, we are witnessing things of the last 8-9 years. Digitization, many speakers would have spoken to you about digitization. We try to summarize the things, what has happened in the digital world. 3 legs: data sharing, payment solutions. Mr. Munot spoke about coriander leaves can be purchased with using UPI. I think that's a big revolution. It's something which we cannot believe that we can, go out across India traveling without cash in our pocket, and we can actually transact and do business and, satisfy all the sort of needs which we have got using the technology platforms. And of course, the identity rails, which are Aadhaar and KYC, DigiLocker, etc., and many more things which is going to happen. Friends, again, all these things happening in 9 years' time. It's something humongous. We are seeing the convenience of all this in our business, how during COVID, we did not have to go out and do business. New investors came in, they got KYCs done, you all started doing business, you all did their investments, they got their NAVs on time, and even they, enjoyed the appreciation of the market, and all of you all were servicing them virtually. So this is where the technology shift has happened, and adoption of technology by all of us has helped us to probably grow our business, but structurally the foundation and the things which have been laid by in the last 9 years has been humongous. Now, because of this, where do we stand? We have seen all this stuff. You guys, all of us keep reading about it. Let's summarize it into 5-6 blocks. We are now the 5th largest economy. All of us know that. Obviously, we are going to progress ahead. The second block is very important. We are the 2nd largest mobile handset manufacturer in the world. Let's appreciate that part and also move to the next leg. If PLI scheme is what Anand, from Templeton explained, all of us know that Apple is going to have the largest manufacturing outfit from India. They are also now talking about the iPad and the other accessories, what Apple produces or manufactures to be happening from India. There is a data which says that in the next 3 years, because of this PLI scheme, India will start manufacturing 5 crore mobile handsets every year. This is not small number. This is going to be big number, and we're going to become the largest exporter in the world. So this is how the transformation and growth is going to happen. The 2nd largest steel manufacturer, 4th largest automobile producer, and I'm sure as we progress from here on, with Europe and other countries going through their own problems, India is going to become a large manufacturer of automobiles, electric vehicles, etc., and this can be a big shift for India. And the list goes on. Now, during this phase, what has happened? Our AUMs have grown 3 times, 4 times. Market has moved up, but kindly see how many other stuff also which keeps happening. Along with structural reforms, positives, there are a lot of other stuff, negatives which keep happening. All of us have witnessed in 2022, Ukraine war, etc., etc. We never anticipated all that stuff. It has happened in the past too. And even after so many negatives plus positive things happening, the market has continued to grow structurally because India's economy is very, very strong, friends. The strength of India's economy is very, very strong, resilient. The consumerism in India is very strong, and that is why we stand where we are today. And even if foreigners are trying to have their own reaction to markets, the resilience of India continues. So this is where the endorsement I wanted to do in the last 7-8 slides, how and why India is strong and where we stand today. Now, some of the things which probably will make us believe that we have a long journey to go from here on. The market cap is definitely strong, but we are still among the fifth amongst the, from a market cap point of view, which is the capital market cap point of view. The world market cap is 100 trillion. We are still in the fifth rank. There is a big opportunity for us to grow. Let's see the next part. All of us know that IPO market has become very, very buoyant in India. 2021-22, we had the largest IPO mobilization in India. This is X of LIC, friends. X of LIC, we had the largest IPO mobilization in India. As we speak, the IPO market continues to be buoyant. That means there is a very strong secondary market which is going to get developed in times to come, and the sectors who are coming in are very different. So that is the strength of India. Demat accounts, this is the opportunity. If 9 crore Demat account holders are there, we just heard in the previous session that there are 3.5 crore mutual fund investors who are unique. The opportunity for us to become 3 times in terms of investor count is in front of us because all these clients are KYC compliant and ready to come into MF. They would have gone and bought some equity shares of LIC or etc., etc. But why these clients cannot come into our fold? And this is where the opportunity lies for us to go and expand the market. Demat account is a big benchmark for the industry to grow their AUM. Unicorns, we are in a state of unicorns where most of the unicorns have emerged from this state. And the way we are growing, this number will keep growing in leaps and bounds as we go ahead from here on. Yesterday, I was meeting a friend of mine. He has just moved into a business in the last 5 years where he feels in the next 4 years, their business will become a unicorn. And they are doing something which is very different, which many of us may not be able to even understand, but he is into a different sort of a field. But the ability and the ambition to become a unicorn is very, very high. And I believe that my friend of mine can become a unicorn. So that is the sort of growth India is going to see. This is a very interesting chart. If many of you all can't see it, we can send it to all of you all. The belief is that the wealthy and the rich and the wealth creation has happened only in the metros. Friends, that's not the case. The wealth creation in India is happening in B and C cities. If you see the, underline there, Thrissur has got the most wealthiest of the investors or families which have come in the last 3 to 4 years. Can we imagine a small city in down south has got the wealthiest of the families, a group of families are in Thrissur. Likewise, in many parts of India, you will find the wealth generation is happening. It's happening at a very, very fast pace. Either it is through sale of business or real estate, or there are multiple reasons why the wealth creation is happening. But friends, please look at your own markets. The markets and the size of wealth creation is going to become much larger, and these are data points which are already published, means these are all live and kicking in your markets. Taxpayers, the list goes on. This is again an opportunity. Let's get into this. Internet penetration. We are at a stage where maximum internet usage is happening from all the people in India. We have the largest UPI volumes which are happening in India. The transaction pace and the scale has increased multiple fold. Again, big opportunity for us to look at this as a trigger for growth in our business and how financialization of savings can move into mutual funds. Okay, I'll skip mutual fund AUM. A lot of data came in the previous presentations. I can only share, I have a last slide when I end my presentation. This number is nothing. 40 lakh crore is nothing, friends. This number can become, and I will prove it with numbers, that how this 40 lakh crore can become 100 lakh crore in next few years. It is all possible, it is going to happen in front of us. But this is where we are today. We have all forgotten this big event which happened in 2020 and 22. The only country which could not only ensure that vaccination happens maximum in our country, but we did export vaccines and ensured that many of the countries get cured and healed, and we are still providing those support to many countries in the world. Only this country can do, because the population, the intent, the ability for this country and the people, citizens of this country is humongous. Only in this country we can do all this stuff. But this is what we have done. We have forgotten about it more or less, but this is history, not long back. So having said what we have done and where are we today, my next few slides will try to articulate what is going to happen in the next 10, 15 years. So that's very important. All these things maybe in bits and pieces or cumulatively you all would have heard, in multiple forums. But there are certain things which are very strong, which we believe, as a fund house, as a team, that all of us should know, and what is the next level of growth which this country and this mutual fund industry and all of us will witness. How it is going to happen, why it is going to happen. Any guesses which place in India or which place in Bombay this particular photograph is? Huh? Pardon? Someone said Dadar. Who said Dadar? Friend, this is Dadar market in Diwali. India is a consumption story, friends. Can anyone beat this? This is everyday's picture. Maybe in Diwali day it was very big. You see the type of, this is a mall, photograph of a mall, which I go to malls many times during the weekend, and I'm surprised the type of people who come. This is a photograph of a mall. You go to airport, you go to railway station, you go to, we are traveling, many of us travel, this hotel we have booked for the event, everything is blocked. Not only for occasions, it's during the course of normal weekdays also, it is all blocked. India is a country of consumers, friends. And if car, hotels, population coming in, they are going to keep consuming. So this is the base case. All of us know that money is still lying in gold, money is still lying in agricultural land, it is lying in real estate. The unwinding is happening in a big way. Please talk to your investors and try to understand when will their real estate unwinding happen, or nudge them towards that. Many of our investors sit on agricultural land or real estate thinking that this is going to appreciate and that money is going to, probably that is liquid money for them. It is not. You guys have to nudge them and bring them into actual mutual fund investments. But that is a huge potential for all of us. So outside world, there is a lot of potential. I'll skip some of these slides. Penetration, all of us know. Let's get into what the big people or people, the famous people, the most respected people are talking about. So Sundar Pichai says that India will be a global player in the digital economy. It's being endorsed. Mr. Ratan Tata says that he's proud about India and he feels that India is going to become much bigger in times to come. And Mr. Ambani says that by 2047, India is going to become the largest economy in the world. So these are endorsements from people who are seeing, who have a vision. And I'm sure all of us will be able to witness that as we go ahead from here on. Now, what is the change which will, because of which they are all optimistic about? This is one important data. Today, as we speak, between 2016 till today, 27 million of our Indian population was in the middle income. By 2026, 55 million consumers or households in India will come in the middle income population of India. That is our potential. This population, this number is a big, big shift which is going to happen in the next 3-4 years. Are we ready to capture that? We have to keep thinking in our business model. Next, very interesting data. Many of us, see, we have categorized the different age bands into various generations. Baby boomers, Gen X are probably the potential clients whom we are servicing today. Millennials are coming incrementally because of the digital revolution. We forget the Gen Z and the Gen Alpha. These are the population, this is the population which is going to come into our fold in the next 10, 15, 20 years. Please see how the shift is going to happen. 2022, the demography of our investors is more skewed towards the first 3 categories. As we move ahead, the bottom 2 categories are going to move up. Are we ready to service them in times to come? Friends, they are moving from physical to digital to virtual. They like to come and they would like to be serviced by you, but we need to adapt and change our methods of doing business. Probably change our methods to nurture them and handhold them in their journey towards wealth creation. But this is going to be a big population shift which is going to come into our country, and that's why mutual fund industry, we are seeing so many AMCs are coming. Why are so many AMCs coming into India? Because they are looking at this potential for the future. Very interesting data. As of 2020, India had 67% of its population in the working age group of 15 to 64. As we go ahead from here on, 18 crore people are going to come into this 15 to 64 years population between 2020 to 50. Imagine 18 crore. Out of that existing population itself, the potential is there in front of us. 9 crore Demat customers, 4 crore mutual fund customers. Imagine if 18 crores come, what is going to be the, big, it is a problem, it's going to be a problem of plenty for all of us. There is going to be a huge inflow of potential clients which are going to come to this industry. Hence, that is the potential we are looking at. Are we ready for that? Another important data. In India, the dependency ratio is inverted. If you go to Europe and other markets, the dependency ratio is moving towards, it's moving up. That means higher age band, people are getting more dependent. In India, it's the converse because of the age, age difference, the demographic, differentiation which is there. We are a different country. Hence, people are looking at India very minutely. Some more data points. Projection shows that India is going to become the consumption leader of the world. By 2030, we're going to be China. This is data in front of us, and this is going to happen 5-10 years here and there. I am quoting Navneet again. He did mention about this data. The per capita earning of Indian population is going to shift. So the data shows that today, if you are at $2,000, this $2,000 is going to move to $5,000 by 2031. Now, if the per capita is going to move by 2.5 times, if the basic hygiene of roti kapda makan is happening today at $2,000, when the $2,000 person starts earning $5,000, he doesn't need to bother about roti kapda makan. He starts looking out for, the aspirational part starts building in. And that's where the consumption story and the other stuff will start coming into our country. Reason why India is now building infrastructure for the next 10, 15, 20, 25 years. Please know there's a big shift which is going to happen. Very, very important data. We are what China was 10 years back, even after so much of growth which has happened. You take example by example, housing, you take automobiles, even though we are the second largest automobile manufacturer, we are still what China was in 2009 from a consumption point of view or number of automobiles which are consumed in India. You take refrigerators, you take air conditioners, you take any such product, we are much, much behind China, we are much behind US by a huge margin. This is the sort of potential. The next leg of growth will come from infrastructure. Please note, all of us have been speaking about infrastructure. Last 10 years, the only unfortunate thing in India which has not happened structurally is capex. If all these things in the past 5 slides, what I've shown is going to happen, capex has to come in. And this is where the next leg of growth is going to happen, because capex leads to employment, which will lead to economic growth, which will lead to savings, that will start coming into the real economy. And that is where the growth is going to happen. And hence, we feel that the next leg of growth is going to come from capex. So I spoke about consumerism. I am now speaking about capex. I also spoke about demographic dividend, the type of clients or type of potential investors which are going to come in. PLI, Anand has already spoken about it, that's a big enabler. This part, how much time I've got? 8 minutes remaining. Please note, by 2040, 96% of India's population will be using smartphones. 96%. This is going to be a big shift. If that shift is going to happen, and this is not an Excel sheet projection, this is actual data mining which says that this is this type of shift which is going to happen. Any guesses in this room how much percentage of time or how many hours in a day all of us spend daily seeing our smartphones? Huh? Don't tell me 12 hours. 4 hours. See, there are no prizes. Mr. Rao is not going to give any prizes. But there are mixed opinions, right? So 4 to 5 hours is the average. Now imagine, all of us are in the industry, we are talking to clients. If this percentage starts coming into using smartphones and they start, spending 4 to 5 hours, how much potential business can come through this small instrument, one can only imagine. And the entire shift is going to happen as we go ahead on the digital side. Last part on the economy. This is a very interesting slide. I had asked my product team to capture. See, all of us are market guys. We talk about BSE 100, 150, 250. I asked them to understand and give me some data. Where is the next leg of growth which is going to come in? Which are the big multi-cap baggers or the sectors which are going to be larger? If all these things are going to happen in India, which sectors are going to get benefited? See, these are the sectors which are going to come in. These are not sectors which all of us are, keep an eye on. These are small sectors today. Financialization of savings, we spoke about that. Insurance, AMC, fintech. Rising per capita, the premiumization of all of us, consumption part, leisure and tourism, entertainment, e-commerce. These are small weightages in the market, in the indices today. These weightages will become very, very large in times to come. The Indian manufacturing push, the PLI, etc., whatever we are speaking about, which sectors are going to get impacted? These are small sectors today. Imagine if all these sectors start becoming large, how the market cap composition and how the sectoral composition of all our portfolios are going to look like. So this is the big shift which is going to happen in India. We have to wait for that. This is the future of India. Okay. finally summarizing this part, and then I'll go to what needs to be done. So economy is going to grow, housing, the savings are going to come in, retail participation is going to increase, digitization and demographics. We have spoken about all these things. Now what we need to do, finally 5 minutes, I'll just speak about what are we going to do, what we are supposed to do. So 5 mantras for success from my side. I keep repeating this slide in many of the forums. So they are repeat, but this is my passion. I would like to just be consistent here too. I'll skip this part. I think Navneet spoke about it. Okay, acquisition of new investors. This is very important, friends. How many of us in this room, let me again ask a question which I asked in some forum a month back. Do 4 client meetings in a day? 4 client meetings in a day. Can you raise your hands? Okay, in Bangalore 4 is not possible. How many of you will do 3 meetings in a day? So I think the hands being raised are limited. I don't know whether you are doing 10 meetings in a day, then that's great. But are we doing more meetings, more client interactions? Because that's where you will be able to get new clients on board. The new client acquisition is a very, very important enabler, because if all these clients are going to come in, how do you get those clients? Okay. RMs are enablers. They should not do client meetings. Okay. This is another thing. So if we have to do client meetings, if we have to acquire clients, clients are coming into the industry. Please see, in the last 2 years, retail customers are coming in leaps and bounds. Navneet did share this data, but this data is in front of us. In leaps and bounds, the retail customers are coming. The HNI customers also are coming in a big way. HNI definition is 2 lakh plus as per SEBI year. It is not 10 lakh, 15 lakh, 20 lakh. So the number of clients who are coming in our markets is large. Are we able to capture that? The second part is asset allocation. I think very, very important that we should continue to practice asset allocation in a very, very diligent manner. It is not market cycle linked strategy which we should adopt. Asset allocation is something we have to keep doing around the year, and this is a very important tool to give us sticky long-term assets. Technology, we have spoken about that. Upskilling. I think upskilling is very important in our business. All of us have to keep enhancing our knowledge. The entire infrastructure what we have. The fourth point is very important. How many in this room, can I have another honest raise of hands, have recruited staff, sales staff in the last 3 years? How many all you, yeah, I'll repeat the question. How many of us in this room have recruited people to grow your business in the last 3 years? Friends, you all have to go out and start expanding your infrastructure, because if you are having 50 crores of AUM, it cannot become 500 crores if you don't have people to support you. You have to do transfer of knowledge from yourself as individuals to become a corporatized entity. If in India, small cap, mid cap companies have come in, they were MSMEs or they were unorganized companies. Unorganized companies have become mid cap companies by growth. They have not become by thinking that they will become big. You have to keep investing in infrastructure, business, office, people. Think long term. I think long term thinking is very important. All of us are in this business for long, eternity. Let's keep thinking long term. When you think long term, impediments will come. Please don't get hassled by impediments, because I still believe that we are the sarthis of this industry. Because of us, investor is creating wealth. You all are doing a great service to the society. If we don't believe in that and we don't work as sarthis, like the person who is showing the vision to the investor to create wealth, that is the respect which we want to get in this industry, and reason why no customer will leave you. Forget about direct. People will have to come to you for if their ability to do wealth creation can happen only through you, and you all have to be true to that. And I truly believe you all are doing that activity. Please keep doing that. So this is the final thing. Last part of my slide, I said I'll end with this. My time is over, but this is very important. I personally believe, and this is something which in our team, there's one very smart, young, intelligent girl. I asked him to say that, "Mere ko batao, next 5 years mein, how this, what is the industry is going to become?" Just focus on this slide, please. Savings, deposit, fixed deposit, insurance. I believe that if investors have put money for savings, they are also putting money in insurance. That is also potential money which is going from the savings kitty for long term. You see the growth of that cumulative industry. 150 crores in 2019 has now become 209 lakh crores. Our industry as a percentage of that has grown in this manner, 24 lakh crores to 38 lakh crores. When I prepared this slide, it was 38 lakh crores, now it is 40 lakh crore. We have grown by 16% every year. That industry cumulatively is aggregating at 10-12%. Now, if I do a straight line projection, 209 lakh crore, just focus on this total fourth row, is going to become almost 400 lakh crore by year 2027. If we keep growing at the pace at which we are growing and we do some extra work to get that some more money into our mutual fund industry, what does this number become in 27? How much does mutual fund industry AUM become in 27? In 2027, what is the mutual fund industry AUM going to become? Many of us can't believe it. It is 107 lakh crore. It might happen after 2 years, after 3 years after that also. It can happen earlier, I don't know. But this is bound to happen. Because insurance industry, savings bank, this is going to keep growing. We are seeing that the entire banking industry is pushing for savings. Deposit growth is going to happen. Insurance industry is also going to grow. If our industry is going to grow at this pace and then mark to market can happen, may not happen, this sort of a growth can happen and 100 lakh crore can be the industry size after 5 years, 6 years, 7 years. Imagine your AUMs will become 3 times, 5 times, 10 times. Are we ready for that? We have already discussed that. Is it going to happen? It is going to happen. Do we have the infrastructure and the country where it can happen? It can definitely happen. So all of us together will have to work towards this growth. I'm sure that with the hard work and the determination, the dedication, all of you all which you all are putting to this industry, the numbers is going to speak for itself in times to come, but we have to have the belief and the conviction amongst all of us to achieve that. With that, I will end my presentation. Thank you very much.